In today's day and age, we have various kinds of investment options which are available at a click of a button. You can invest in cryptocurrencies, you can invest in NFTs, you can invest in mutual funds, stock market, small cases, etc. But do you know that despite having so many kind of investment options, even till this date, as per the data released by SEBI, that is Security Exchange Board of India, more than 95% of Indians even till this date prefer to invest in fixed deposit. So why is fixed deposit still being considered to be the most favorite investment option? Despite having so many demerits, why do Indians still prefer to invest in fixed deposit? Let's understand that in this video. Hello and welcome to IndianMoney.com's YouTube channel. My name is Fayaz. Fixed deposit, one of the oldest and the most trusted ways through which you can protect your wealth, you can protect your money, is definitely the favorite of individuals even till this date. I know our parents and probably our grandparents still vouch with the idea of investing in fixed deposit, but we as youngsters or we as millennials or Gen Zs prefer to invest in various other kinds of options which are available these days, which definitely offer you way more interest rate and definitely look way more interesting, lucrative. But despite that, a lot of people still prefer to invest in fixed deposit. So one by one in this video, let's understand the pros and cons of investing in fixed deposit so that ultimately you can decide towards the end of this video whether you want to go ahead with fixed deposit or you want to explore the new interesting investment options which are available. So the number one advantage of fixed deposit is that you are able to choose the kind of interest payouts that you want for yourself. So let's just say that you want to ensure that you are able to get your interest payout every 1 month or maybe every 3 months or every 6 months or maybe every year. You can decide that. You don't really have to wait till the maturity of your investment option. You can choose by opting for either the cumulative base or the non-cumulative base as per your wish and will. You can ultimately decide as per your choice of date. You can get the interest payout from the respective bank wherever you have opened your fixed deposit account and wherever we have deposited your amount of money in the form of FD. The next advantage of a fixed deposit is that you get to ensure that you are able to save your taxes every single year. Yes, as per the ATC of Income Tax Act, you can save almost 1,50,000 rupees worth of money. There are certain fixed deposit options, tax saving FDs, which are available in both public sector as well as private sector banks, as per which you can ensure that you are able to save your taxes every single year. So if you are an investor who is not only looking at the idea of growing your wealth, but you also want to protect your money against excessive taxation, then you can definitely do that by investing in fixed deposit, which as an option is not available in all these new investment options which are very much popular these days, like the cryptocurrencies or maybe the NFT space, compared to the fixed deposits which offer you very handsome amount of money in the form of tax savings. Third point is deposit insurance. So let me explain this with an example. Let's just say that you have deposited 5 lakh rupees worth of money in ABC Bank, and it's a new bank which is offering you very high interest rate, and its advertisements are basically everywhere, and you definitely get lured into it, and you end up investing your 5 lakh rupees worth of money in the form of fixed deposit over there. Tomorrow, due to some issue, the banks get shut down, the bank goes bankrupt. Now what happens? So if at all you had invested that amount of money in any other kind of investment option, let's just say in any cryptocurrencies or maybe in some kind of different NFT option, then that money is definitely gone. That's the money that you have lost. Now you can't do anything about it. Let's just say that you bought a share of any company worth of 5 lakh rupees. Then if the company goes bankrupt, then your money is also gone along with that. But if you have a fixed deposit for yourself, and if at all you have invested as much as say 5 lakh rupees, so as per DICGC, a department which basically protects the interest of investors, you will be able to get the money back within just 90 days. As per this particular rule, investors can access up to 5 lakh rupees worth of maximum amount of money as insurance, and they'll be able to claim it back from the respective bank within just 90 days. This is excluding the NBFCs, that is non-banking financial corporations. But if at all you have invested your money in any kind of a small finance bank or public sector bank or a private sector bank, then you will definitely be able to protect the interest of yourself as well as your family. Next point over here is that you get a lot of benefits as a senior citizen. So senior citizens in our country definitely get a lot of benefits, not only in the public transportation, but also in general, even in the kind of investment options that you choose. So let's just say that you are a senior citizen, you are a retired individual who has got X amount of money in the form of your provident fund. Now, you can either invest that money in any kind of real estate option, which is definitely not going to be very much secure. But if at all you try to invest that money in any kind of a fixed deposit account in any public sector bank or a private sector bank, then compared to regular citizens, you will be able to get a better interest rate for yourself. Let's just say that regular citizens get 6% interest rate, then you'll be able to get in the same bank almost 6.5% or maybe 7% interest rate. It definitely depends on a lot of factors like the tenure, the amount of money that you're depositing, etc. But you get a lot of benefits in terms of the kind of interest that you get and also the kind of TDS benefits. So let's just say that for regular investors, you'll be able to get a tax benefit or a TDS benefit of up to rupees, say 40,000 rupees. But for senior citizen, the same is almost as much as 50,000 rupees worth of money. And also, if at all you are someone who is not making taxable amount of money, but somehow the TDS is getting deducted, but you will be able to save that TDS amount by submitting form 15G and 15H. So even if the TDS is getting deducted, but if at all you are able to submit these two forms, you will be able to claim for certain tax benefits or TDS benefits for yourself as a senior citizen. Next point is the loan against FD. So tomorrow, let's just say that you want to have a credit card for yourself, but due to a bad credit score, you're not able to get the right kind of credit card facility from the respective banks or the kind of banks that you want to get a credit card from. But if somehow you have a fixed deposit of, let's just say 1 lakh rupees, or let's just say that you need to have some kind of money, some kind of cash for yourself to carry out your business transaction or maybe your freelance operations. And if at all due to bad credit score, you're not able to get the right kind of credit card for yourself. In this scenario, what you can do for yourself is that basically you can open a fixed deposit account in any of the favorite banks of yours. And then on the basis of that fixed deposit money, you can actually ask the bank officials to offer you a credit card. So let's just say that you offer 1 lakh rupees worth of money in the form of a fixed deposit. Let's just say that you open a fixed deposit worth rupees 1 lakh. So on the basis of that, you will easily be able to claim for yourself or avail yourself a credit card which can offer you a limit of as much as 60 to 70 or even 80,000 for that matter. So that easily you will be able to access your credit facilities, and even if your credit score is low, you will definitely be able to take loan against your fixed deposit, and you can also get a credit card against your fixed deposit. So they say that every coin has two sides. Fixed deposit, being one of the most trusted investment option by individuals in our country today, also has a few demerits or a few cons. So let's have a look at the demerits or cons of fixed deposit. The number one biggest possible disadvantage of fixed deposit is that it fails to beat the inflation levels. So in most cases, the fixed deposit levels will not be more than 6%, 7% or max to max 9%. Not more than that. You cannot get more than a single digit in terms of the returns that you're expecting from a fixed deposit. But if at all you have read a little bit about economics in our country, then you must be aware about the fact that the inflation rate is as much as 6 to 7% in our country. So if at all you want to beat inflation rate, you need to invest in the kind of options which will help you to get double-digit returns. But fixed deposit, unfortunately, is not able to do that. It will not be able to beat the inflation rate, because of which a lot of investors prefer to invest in various other kinds of options which might be a little bit more riskier, but they will give better returns, better numbers compared to fixed deposit. The second disadvantage of fixed deposit is that it has penalty on premature closure. Let's just say that you open a fixed deposit account for yourself which has a tenure of 5 years. So after 2 years of successfully holding that fixed deposit for yourself, somehow after 2 years there is a medical emergency in your family, and if at all you want to close that fixed deposit account, so there will be different kinds of premature closure charges, premature exit charges, and the load of that will be too much. It will be probably 1%, 2% of the total amount, which will definitely be very much costly for you as an investor. So if you compare that with other investment options like liquid based mutual funds or maybe debt funds, etc., the exit charges or the exit loads are way lesser compared to the exit load in a fixed deposit account. Maybe because of this also, a lot of investors prefer to invest in other forms of investment options. So while explaining the pros of fixed deposit, I told you that fixed deposit offers a lot of benefits to senior citizens. But if you're a regular citizen, if you're a regular individual who's less than 60 years of age, then you will definitely be able to attract a lot of taxable interest rate for yourself. Let's just say that you have deposited a big chunk of money for yourself in the fixed deposit account of yours. So if the interest payout is coming more than 40,000 rupees for a regular citizen, and even if you're a senior citizen, let's just say that the amount of money that's coming to your respective bank account in the form of interest is more than 50,000 rupees. In that case, you'll have to pay tax on the respective interest that you're generating. For a regular citizen, if it is more than 40,000 rupees, it attracts tax. For a senior citizen, it's more than 50,000 rupees. So that's one more demerit or one more disadvantage of investing in a fixed deposit investment option. And last but definitely not the least is the fixed interest rate. A lot of people prefer to invest in options which are more secure, which give you stable, consistent returns. But let's just say that this is also the blessing of a fixed deposit and also the curse of fixed deposit, that it will give you consistent returns, irrespective of whether the market is going through a bull run, whether the economy is flourishing, whether the country is progressing, whether the stock market is booming or shooting up the sky, shooting up the roof, irrespective of whether the stock market is going more than 60,000 or 70,000 points. you will get your respective interest rate and it will be consistent. You will be getting only 6%, 7% or 8%, whatever the interest rate that you have chosen from your respective bank. Only that amount of money is what you will be getting as an interest payout, compared to other investment options, other investment classes. Like let's just say that you have invested directly in mutual fund or you have invested directly in stock market, then you will definitely be able to get better rates for yourself. You have chances of getting as much as 12%, 15%, 80%, and even 30% in the form of rate of return for yourself. Compared to that, fixed deposit will give you as much as 6, 7 or 8% maximum. So this is one of the major disadvantage or demerits of fixed deposit. So what's the moral of the story? What's the conclusion? Well, if you are a conservative investor, let's just say that you are a senior citizen, or let's just say that you are a person who doesn't want to take a lot of risk with your investment option, and if at all you are okay with the idea of getting lower interest rate, but you are happy with getting consistent interest rate for yourself or consistent returns for yourself, then definitely fixed deposit is the right kind of investment option for you. On the flip side, let's just say that you are a young enthusiastic millennial or a Gen Z guy who's in his early 20s or early 30s, then definitely you should take a little bit of risk with your investment option. You should definitely try and invest your money in the kind of options which have the probability of giving you more returns, more revenue for yourself. So you can definitely try to balance your portfolio in a way that you have the best of both worlds. You can also have some conservative options like fixed deposit, gold, bank FDs, or a government-based investment scheme, etc. in your portfolio. At the same time, you can also invest a little bit of your money in NFTs, in maybe ETFs, maybe in mutual funds, maybe a little bit in stock market, etc. And of course, you will definitely be able to get the best possible returns, and you definitely have to have the right kind of cushioning in your portfolio. So there are a lot of theories around this. So let's just say that you want to understand what should be the equity or debt portfolio in your investment option. In that case, what you can do is you can basically take your age and minus it with 100. So let's just say that my age is 25. So if I do 100 minus 25, that is 75. Which means that 75% of my portfolio should be in equities or should be in riskier investment options, like maybe equity based investment option, which includes stock market or mutual funds or small Ks or NFTs or ETFs, etc. And remaining 25% should be in the secure options like debt, gold, government based investment scheme, bank FDs, etc. And definitely it goes again the other side also. So let's just say that you are a retired individual who's 60 years old. So 100 minus 60 will be 40. In that case, you can try and invest, let's just say 60% of your total portfolio in secure options like gold, bank FDs, government-based investment schemes, etc. And remaining 40%, you can try and experiment with that by investing in mutual funds or maybe directly investing in your favorite company stocks, etc. So I hope you liked this comprehensive video on fixed deposit, and if you did, don't forget to like it, share it with your friends and family. Don't forget to subscribe to our channel and press the bell icon as well so that you get notified every time we upload a new video. And if at all you want us to cover any particular type of investment option or any particular type of topic, if you want us to discuss that topic in detail, you can let us know about that also in the comment section. We would definitely try to make a video on that also very soon. Until next time, my name is Fayaz and this is IndianMoney.com English. Get wise, break free.